I'm Fred McClymans of Samadhi Partners, and on this edition of Perspectives on Tech, I'm joined by my fellow Samadhi partner, John Freeman, and we will be talking about Lam Research, LRCX. John, welcome.
Hi, Fred. How you doing?
I'm doing all right. So before we dig into anything, I do
Sure.
need to inform our listeners that this is a podcast for informational and entertainment purposes. We are not making any stock recommendations, nor should any be implied or inferred, however that goes regarding...
Boilerplate.
Exactly. So, John, this has been a pretty interesting week in the tech sector.
Yes, it has.
Everything from Apple announcing that they have just hired Google's former satellite executive team. Definitely got my attention there.
Yeah, absolutely.
And then of course this was Facebook's F8 developer conference this week. Which
was just amazing.
It was.
What they showed was just mind-boggling, and really starts to the whole augmented and virtual reality stuff, which we've been talking about for years. It seems decades almost, and now it's here. It's here, and it has applicability. It has things you can go oh yeah, I understand the value of that, rather than, hey, virtual reality, we're all going to walk around in the Matrix.
Yeah, no, great point. When you watch the events unfold, in particularly, watching the way the keynotes kind of evolved over the 2-day period, there was a certain point at which I sat back and I said, okay, this is all about fun. I mean, it really was. It's all about, people, using AR to leave secret messages for themselves or to display, artwork on a blank wall that only they and their friends can see.
Right.
But when you dig into it, the underlying theme here, particularly for advertisers and people who love data and engagement, it's value. There's so much, richness. There's so much advertising opportunity. There's so many ways that this can be monetized. Yep. My biggest concern, to be honest, is I think that we really do need to develop autonomous vehicles a bit sooner, because I can only imagine, what AR is going to do, to pedestrians and drivers.
In terms of distraction as a distraction. It's totally, that's really true.
Absolutely.
They do kind of go hand in hand. That's actually kind of funny. That is actually true. It is also interesting, and I think that with all of the things that Facebook was talking about was as fantastic and as compelling as it was all about fun. You're exactly right. I mean, from the end user's perspective, but you could everything they said. You could easily see multiple business-related applications for it, and in fact, though much more quietly, Microsoft is pursuing those as well. So it's not just a Facebook thing. I think they've taken a huge step forward in what they've enabled, but obviously we're going to see a lot of the majors, the Amazon, the Google, Amazon, Microsoft,
right.
Facebook. These guys are going to ride this wave, and each will do it in a different way, maximizing their own competitive advantages and positions and so forth. But it's pretty exciting stuff, I have to say.
One of the things that jumped out at me was the evolving or quickly expanding contrast between Facebook and Snap. Snap has been held up sort of potentially as the next Facebook, or alternatively as the next Twitter. While their stock prices languished a bit after the IPO, it did seem to me that even if Snap had the same aggressive development schedule and rollout plan that Facebook has for these type of technologies, and they're not far off from that. They're evolving to this. Just simply the resources behind Facebook and the fact that yes, give Snap credit. Snapchat has a 71% lock on 18 to 24-year-olds in the U.S. market, but beyond that, Facebook's just the sheer magnitude of their user base and the number of developers coming to the table here.
And
huge.
And let's also be fair and honest. That demographic is a fickle one, and so today is Snap, tomorrow could be something else. I really like and admire what the Snap executives have done with what was a relatively simple, straightforward sort of application. They've kind of but I think a $20 billion valuation is kind of wow, that seems fully priced into everything. You know what I mean? It's like, okay, well, that's the valuation is super rich, and as I don't root against or for Snap, but I'm looking at it going, you know what? There's a real good chance, if you think probabilistically, that this is more, maybe not even a Twitter, but there's a good chance it might be a Groupon, right?
Well,
So, and no, seriously, like I really think that Snap's downside risk plus the probability of that downside, ooh, man, that makes me not want to get involved at all. But I don't want to short it either. But
nope.
Boy, man, you want to stay away. That's our view.
So for our listeners, Snap is something that we've been covering since before the IPO, and we published a piece. In fact, I think a week before the IPO about why we were not snapping up Snap. You'll find a link to that in the description of this podcast. It's worth checking out because we will be coming out at some point shortly here about 3 things that could drive us to buy into Snap. I'm not sure they're going to happen anytime soon.
Exactly. Yeah,
but it's 3 things that would make Snap.
I mean, it's interesting because that piece that and you wrote it, Fred. That was a really well written piece, well researched, and almost 50,000 views.
Yeah.
It was by far the most popular piece we've written because Snap. I mean, let's face it, I think all of the internet names, if you're a consumer internet name, you're going to get a little bit of a valuation premium just because retail investors pile in.
Right.
Now, however, that also turns the other way. That is a double-edged sword because when the retail investor doesn't, freaks out because of some metric or something, or the stocks just starts going down, you know what I mean? There's a lot of that sort of incremental pile on. So yeah, for that and other reasons, we are on the sidelines on Snap. But it's a very interesting company and very it is definitely a pioneer, no doubt about it.
It is, and I do expect some really interesting things from them over the coming years. I really like the management team. I like the focus, and I like the way they approach the customer experience and what the value they're bringing to the table. Cool. But getting back to Facebook for a minute,
sure.
One of the interesting things that came out of this week was sort of the comparison between Mark Zuckerberg and Elon Musk.
Yeah.
Both of these guys in the past week now have dipped into the water of augmented brain technology, so to speak. With Musk talking about a neural mesh, a neural net mesh,
right?
That could potentially be implanted inside a human brain. Which, by the way, it has been tested to be safe in rodents at this point. But his goal literally is to have the idea of putting a mesh inside the cranial cavity that allows augmented computer capabilities to be introduced directly, into the brain. So there's Musk on that side. On the other side, you have Zuck talking about his goals to allow you. In fact, to paraphrase Zuck himself, wouldn't it be great if you could type by merely thinking the words? So you've got this connection here.
My productivity would go up a little bit.
Right. So Musk is going to help augment our brains with technology. Zuckerberg is going to give us the ability to actually take that improved capability and translate that words to text and ultimately actions and so forth. So the telekinetic perspective. Right. And then we have Google and Samsung, who have both recently received patents for contact lenses that contain embedded tech in them.
Black Mirror.
Exactly. It's an episode of Black Mirror all the way. So, we augment the brain, we translate the brain's thoughts into action, and then we record the visual history of that action.
So that we can go back and then analyze and improve.
Yes.
Wow. Yeah, exactly. I mean, I have to say, history doesn't repeat itself, but it definitely rhymes. But here's the thing. That's looking backwards, right? Like going forwards, I'm not sure if it's going to rhyme or I don't know what. Things are going to get very interesting and strange. They are. They just are. They already are. And we already see it. But that is the fodder for tremendous investment returns if you can figure out just directionally, right? What's going to play out and who the winners are, and so that's obviously what our business is.
Yes, and in fact, that's one of the things, John, that I really enjoy doing with you is kind of that future casting, figuring out, what are things going to look like, and how will, and not just the business world, but the user, consumer, the social world look like, 5-10 years down the road. Right. Are the technologies driving us in that direction, and who's going to be able to take advantage of these incredible advances, in tech?
But it's also all not just Pollyanna either. I mean, obviously we saw in 2000, what happens is people, when they do get excited, and everybody starts seeing the future, at least a little window on it, and then they just go bonkers because and in a tulip sort of Dutch tulip sort of phenomenon where they just run the prices of a lot of these stocks way above what they should be rationally valued. We're not there yet. I think the market, at least in tech, seems to be rationally valued. But wait for it, because when this augmented reality stuff comes out, you're going to have just really large gyrations, I think, about people thinking it's going to be, a $1 trillion market or a $100 billion market or a $10 billion market. There's going to be just order of magnitude kind of mistakes in terms of how big it can be and what's actually possible. What has, Moore's Law allows a lot of stuff, but there are limits, and there are processing and memory limits and all that stuff.
And that's where our background, or hopefully our expertise in tech and, in investing comes to play, where we look at something and say, hey, look, this is what augmented reality really is today. Here's what it's really going to be
and here are the
2 or 3 years.
Yeah, here's the applications. Here's how much it's worth.
Right.
Yeah, exactly.
So we'll use that future map as sort of a way to set up the guardrails on either side of the road to make sure that we're still driving in that right direction.
That's a great way to put it. Guardrails on either side of the road. Yeah. I mean, and even you and I have scraped and slammed into those guardrails on a number of occasions.
On occasions,
and
yes.
You have to do it because otherwise you never know where the guardrails are. They're probably flying off the cliff.
Right. So so this is a good segue here into Lam Research.
Sure.
We're talking about the evolution of technology, the very rapid and aggressive evolution of technology. And, in today's market, you can write all the brilliant software you want, but you still need hardware to operate that. And that's where Lam Research comes in. So recently, earlier this week, Lam released their 3Q FY 2017 numbers, in fact, on April 18th. They overperformed. They clearly overperformed there. They closed at a record high. They were up almost 6 3/4, a little higher, 6.86 on the day to close at 136.17.
Yep. They were up 6%. You mean, right?
Yeah. It's almost close to 7% just on that one day alone, and they've subsequently, additionally added on top of that over the following days.
That's right.
Pacific Crest, they increased their price target from 163 to 180.
And that guy, the analyst they have covering semicap equipment is one of the best. I think he's the best, actually, analyst in that space. He's actually really good. His name escapes me at the moment, but I always enjoy his research, and he's always very prescient about predicting the future in semicap equipment, which is usually, the traditional way of analyzing the space is just looking at cycles and, its capacity and demand and supply, which all is very important. But at the same time, you really also want to look at what are the long-term trends, and that'll give you, the ability, for example, to get into ASML in 2010, at whatever it was, at $25, and now it's at 130. That's semicap equipment wasn't supposed to do that kind of stuff, traditionally, but it's a different animal these days. It's a consolidated industry, and Lam Research, we believe, is at the forefront of the next generation of chip making technologies that goes from what they call litho-intensive, that is the business of ASML, which is shining the laser light through the mask and patterning the chips, to what we call depot-intensive, which is what Lam Research does. They have deposition equipment, which allows you to you put different layers. Simply speaking, it's equipment with chambers that allow you to deposit material in very, very thin layers on the chip during the manufacturing process. It's a key part. Why is it getting more important? Well, because chips, memory's going first, and we think logic will go in the early 2020s. But memory is most definitely going 3D. I mean, the latest stuff is they can't get smaller feature sizes. So the way they increase memory density per chip is to go vertical. So right now there's 3D, 2 layers, basically 2 circuits, 2 arrays, if you will, of memory sort of on top of each other, and that uses a lot more Lam equipment than it does litho equipment or anything else. I mean, it really drives their business, and you're already starting to see it.
So, one of the ways that that we look at the whole the deposition process, or if that matter, just the computer chips in general, is
the manufacturing.
The manufacturing, is the density of the semiconductors or transistors, per chip.
Semiconductor, yeah,
and
exactly.
When we talk about that, we talk about something called the node, and that is essentially the thickness of the line and the space in between the other lines on a chip
for the circuit, basically
for
the
that
circuit width. Yeah.
So
exactly.
where are we today on that?
So today we're at 14 nanometers, which is kind of mind-boggling. We are moving very quickly. I haven't seen any chips ship yet, but TSMC apparently is now cranking out chips at the 10 nanometer node, and this is very significant because this is the first time that TSMC, which is the largest manufacturer of chips in the world, overall logic chips, whereas Intel and TSMC kind of go back and forth, but TSMC, this is the first time that Intel will not be the first company to the next node, and that means that really TSMC has taken the reins, and they are now driving Moore's law, not Intel, and I think that's a highly underappreciated development and phenomenon that's going on, and that's one of the reasons why TSMC is in client portfolios that we manage.
As is Lam Research.
Yeah, and now Lam benefits primarily on the memory side today, but even also on the logic side. As you do more, you have to do more deposition passes, what they call it. When you take the wafer and you put it through the damn machine, right? And how many times you have to do that? You have to do that a lot more times now that we're at the 14 nanometer and 10 nanometer space, because it's just really, really hard to make the lines that small. So memory going 3D, logic and memory going smaller feature sizes, both of those are driving Lam's business, and I was really surprised. That was a solid beat and raise, and not only that, but even more than revenue, which I think grew about 16%. Shipments, which they always sort of announces, and that's a good way to sort of calibrate how the next couple of quarters are going to go as they get paid for their shipments. That was up 25%. Yeah. Well, I mean, for this kind of business, I mean. Yep, that's impressive.
So year over year for the quarter for 3Q.
Yeah, that was sequential.
So year over year though they were up 64.1% year over year, and that's just huge. So so let me step back for a second here though. So when we talk about the density of transistors and the node that particular manufacturers are on.
Right.
It's not just that Intel is on that. It's who are the suppliers, who are the people who are actually layering that on, and that's where Lam comes in.
Yep.
So what's the typical cycle of the next node advancement? Is that 6 months? Is it 18? Is it
right? So it depends on the chip, but so everyone thinks of Moore's law as being a 2-year pace and a 2-year cadence, because that's what Intel talks about. Intel is, the one who, obviously Gordon Moore is a co-founder of Intel. They're the ones who kind of, use Moore's law as a marketing thing. But Moore's law applies to everybody, not just Intel. But it applies in different paces and different cadences. So, for example, with NAND flash, because with the demand with iPods and smartphones, and now even in the data center replacing all the hard drives and in PCs, we've seen tremendous demand. So what we've seen with NAND flash actually over the last 10 years, the pace has been slightly faster than Moore's law. That is, the density of transistors doubles slightly less than every 2 years, and the cadence is twice that. Meaning this: every year they retool and crank out chips at a smaller geometry. So basically, if you double over 2 years, that requires you to, increase transistor density by about 42% every year, which is exactly what memory does. Whereas Intel, for example, with their CPUs, their pace has been 2 years, and their cadence has been also 2 years. Now, interestingly, they have now announced that they have slowed to 2.5 years, both pace and cadence. And a lot of people have said that means the end of Moore's law, or Moore's law is slowing. Well, Moore's law is slowing for Intel. Moore's law is not necessarily slowing for everybody else, and it doesn't appear that it's slowing for memory. Everybody's also used to Moore's law being driven solely by making the feature sizes smaller, because honestly, that's the way it has been driven since the 60s, literally. But you can also drive it, i.e. increase transistor density, if you layer two chips, two circuits on top of each other, interconnect them. Then you have twice the circuit, twice the transistor density, and you can you could have 4 layers, 8 layers. 128 layers. It goes on and on and on. And we believe that is the way that Moore's law is extended. We're not the only ones who are saying this. There are others who are as well. But those people who understand that's what's happening tend not to be on Wall Street. I mean, I think a lot of Wall Street now believes that Moore's law is ending or slowing or something. And there may be aspects of it that are correct for short term, but in terms of an investment sort of philosophy or an investment belief, it is dangerously wrong.
Right. So the interesting the analogy that I often use to explain that concept in Moore's law and the chip density issue,
right.
It's somewhat analogous to going back 100 years ago. You had a city block, and there was one level per city block.
Right.
And once you get to right. So but exactly. Once you get to that point where, hey, we need to add more people, we need to add more capacity, more stores, more offices, more retail, more you name it, you start going vertical. Yeah. And that's exactly what we're doing. Is we're about to start going vertical. And we know what happens when you go vertical. The capacity increases exponentially.
Yep.
And you have this whole new, industry that builds up around that added value, and that's what we think is going to happen here with Lam Research and some of the other players in this space. As you and I have discussed, previously, one of the reasons why we think Lam is starting to accelerate now is because the technology is moving into a space where there is pent-up demand for what they're delivering, and we expect uptake, to continue to increase over the next 12 to 18 months easily.
And if you're a long-term investor, we think that this 3D trend is a much longer-legged trend than the next 12 to 18 months. Lam Research is going to be the revenue growth and so forth is going to be driven largely in the next 12 to 18 months about that's going to be all about memory. Really, and the fact that data centers are just replacing hard drives with NAND flash. I mean, NAND flash is going gangbusters, and the makers don't have the capacity, so therefore they have to turn to Lam Research and buy those machines and get the capacity to do so. But longer term, we also believe that Lam is really well positioned because we think logic goes 3D too, and when logic goes 3D, it's going to be a lot different. And the reason is because a logic chip is a CPU, anything that's not memory, basically any kind of processor. It has a lot of what they call elbows. It has a lot of sharp angles in the circuit. The pattern is so much more complicated than memory, which is essentially just a lot of lines, kind of connected by a little microcontroller there on the chip. But with pure logic, oh man, that's a lot harder, and therefore you're gonna need even more of their deposition equipment. Applied Materials also benefits here, but not quite as much as Lam Research. That's why we put Lam and not AMAT in client portfolios. Other thing, I'm gonna throw one more thing out there just as a teaser for everybody. The other thing that gets really hard is inspection. And there's a little company out of Israel called NVM Novo. It's NVMI is the ticker, and then there's of course also KLA-10 Core. Both of those companies we are monitoring diligently. But right now, I mean, Lam is just such a great and by the way, about 20% of their market cap is in cash. So,
we love that.
We love that.
So I'm glad you mentioned KLA-10 Core. Sure. They were up the day after Lam's results. They were up 3.16% on the day. MKS Instruments, another play in the space, up 3.39%. Yeah. Vico, another company that we like, up 6.51%.
We actually had Vico in our portfolio. Yeah, and unfortunately we sold it. We probably sold it too quick. I mean, Vico was such a value opportunity when it was trading at 18, $19, and we sold, I think, 24, 25. Now it's at 30, 31. And it kind of prompts us to take another relook at the fundamentals to see what the growth profile of Vico is.
Yeah.
The whole sector is doing well, but you got to be careful. You got to be careful with this sector because it is, tech is cyclical. And then semiconductors are even more cyclical than tech. Well, then capital equipment is historically been even more cyclical than semiconductors. So you can get really hard valuation crashes. But for now, I think Lam is a real good bet. ASML at 130 seems overvalued to me, but it's a very solid company as well. If you're a very long-term investor, then ASML might be interesting to you as well.
So, John, we've got about 5 minutes left here
Sure.
in this Perspectives on Tech podcast, and what I'd like to do is get three investment pillars for Lam Research.
Sure.
The three things, just boom, boom, boom.
Yeah.
What do you really like about them? And then what are your three concerns about the company? So starting with the investment pillars.
So the pillars, I think we kind of touched on them. It's basically memory in the short to mid-term going 3D. And the fact that requires a lot more of their equipment. That's one driver. The second is DRAM and in particular NAND flash, solid state storage, replacing hard drives. That just expands that potential market. That's just a straight up capacity increase sort of thing, and Lam is benefiting from that as well. And then of course, long term, everything goes. Logic goes 3D too. So you've got that but we don't think that's going to happen until the 2020s. But that's that's probably an order of magnitude larger opportunity. And then the last thing is this: it's a really well run company. We love management. And it's a solid balance sheet, like we said. Actually, probably a little less than 20% of their market cap is now in cash because the stock has done so well. But nevertheless, real solid financials, and so that's kind of the pillars. The concerns are as follows. It is because it is more sensitive to gyrations in the tech market overall. If we have a macroeconomic hiccup, for lack of a better term, those guys are going to get hit the worst. And so that's why, you got to kind of be on your toes with that, with it, because those guys fly around a lot more. In 2008, when we hit the financial crisis, tech companies, revenue declined 5%. Chip companies, oh man, revenue declined 20%. Revenue then, when you translate all the way back in the supply chain, the semi-cap equipment guys, they declined 40, 50, or even 60%. And then they bounce back the next year. But what I'm saying is, you can hit some really hard valuation problems. I would say, actually, that is my primary concern. I'm not sure if I have more than that, frankly, with Lam, because that's and because that's such a big one too. Because if you care about your returns and your liquidity within a 1 to 3 year time frame, you might have to be more patient than you might want to be. Right?
Yeah.
So,
no,
anyway.
I agree. And your point about the impact the further down the supply chain you go, I think is really important, because we see that in a number of different facets, within the tech sector.
Yeah.
But you think about the the companies that are out there, the big names that are delivering product out to the mass consumer, the Apples of the world, and the Microsofts and the Samsungs and all these people.
Yeah.
It's their development cycle, from an R&D perspective, is lengthy, but the build process of that, it's relatively short time frame.
Yeah.
But
and
all
it can
that
swing around so much.
it can, exactly. And when that swings, though, that flows back downstream. So perhaps even you can start to look at companies like Lam as sort of a canary. Out there. If they see their demand trailing off, that means that the ultimate end consumer product company, they're forecasting a lot less as well. And
as they do in what that means is they're forecasting that quote unquote internally. That's their whisper. That's their whisper number.
So conversely, though, you can look at Lam Research right now, and you can say, look, they have had a uptick, and we're starting to see some of that in some of the other companies there, which is probably a pretty good sign that they're getting good signals from their, from their customers and their customers' customers.
And there's customers
moving down the road.
Yeah, that's exactly right. No, totally true.
So, John, this is good. Good conversation about Lam Research and certainly about Facebook and Elon Musk and brain technology.
The Matrix.
Yes. So, I'm Fred McClymans. This is John Freeman, and you have been listening to Perspectives on Tech from Samadhi Partners.